Welcome to Financial Freedom FX. In today's video, we'll analyze the GBP JPY daily chart divided into 3-month quarters to uncover how smart money is influencing the market. This breakdown will cover major support and resistance zones, key price reactions, and high-probability trade setups based on market structure, candle behavior, and institutional activity. Let's dive straight into the analysis. Starting from the left side of the chart, we observe a clear downtrend in November through early December 2024. The market consistently formed lower highs and lower lows, indicating that bearish pressure dominated this phase. However, as we moved closer to late December, price began slowing down right at a key horizontal support zone marked on the chart by the purple shaded area. This zone had previously acted as a resistance level, and now price was revisiting it from above, showing signs of a potential support flip. Long wick rejections around this area revealed clear signs of buyer interest. This created a high probability reversal zone, where smart money likely accumulated long positions after sweeping liquidity below prior lows. Many retail traders would have been stopped out here, unknowingly providing fuel for the upcoming move. Entering the next quarter from January through April 2025, the price action confirmed the bullish intent. A shift in market structure occurred, as the market printed a higher low and then broke previous swing highs, a classic signal of bullish reversal. Price began consolidating around the same purple zone, turning it into a mid-range equilibrium area. This prolonged sideways movement was not random. It was likely an accumulation phase, where smart money was building positions while keeping price within a tight range. This consolidation eventually led to a strong breakout toward the upside, with clear bullish candles showing momentum and conviction. As higher highs and higher lows continued to form, this confirmed the transition into a new bullish trend. The smart move here would have been to buy breakouts from the range and hold toward previous highs, riding the momentum as the market shifted direction. As we moved into the quarter from May to July 2025, the bullish trend extended further. GBP JPY reached a key resistance zone around 199.970, which acted as a psychological round number resistance as well. The market stalled just beneath this area, suggesting distribution by larger players. Price repeatedly failed to close above this level, and then we saw a strong bullish breakout, but only for a moment. This move quickly reversed with a large bearish engulfing candle, signaling a liquidity trap. It's a classic example of a false breakout where many breakout buyers got trapped, and smart money used the move to liquidate positions before reversing the market. Price dropped back into the same purple zone again, reinforcing its strength as a multi-tested demand level and fair value area. As of the current price action in early August 2025, the market is sitting once again on the purple demand zone, currently around the 196.2213 level. This area has proven to be the key battlefield between buyers and sellers across multiple quarters. Candlestick behavior here is once again showing signs of hesitation. Smaller-bodied candles with long wicks, a potential signal of absorption and buildup. At this point, the market is at a decision zone. A bullish confirmation from this level, like a bullish engulfing or a pin bar, could lead to another rally back toward the 199.970 high. However, if this level breaks down with a strong daily close below the zone, we may see a deeper retracement toward the next major support levels, which are located at 184.495 and 184.362, clearly marked on the chart. Traders should remain patient and wait for clear confirmation. The current structure creates a perfect setup for a range-bound strategy. Long positions above the purple zone targeting 199.970 and short positions if the zone is broken with strength targeting the lower levels. The best setups will likely come after a fake-out or a liquidity sweep, so it's crucial to pay attention to how candles form around this zone. Also, look for confluences like wick rejections, volume spikes, or market structure breaks before entering trades. This entire GBP JPY chart tells the story of how smart money operates, manipulating retail sentiment at key levels, creating false breakouts, and using tested zones for both accumulation and distribution. These price behaviors, combined with multi-timeframe alignment and proper risk management, can give you an edge in the market. So whether you are a swing trader or short-term intraday trader, understanding how price interacts with these quarterly zones will help you avoid traps and trade with the institutions, not against them. Now that we've broken down the daily time frame, let's zoom into the 4-hour chart to sharpen our entries and understand how smart money is operating at a more granular level within the same key zones. The purple support area we identified on the daily chart continues to hold significance here. And on the 4-hour chart, its importance becomes even more obvious. From this perspective, we can see multiple precise touches to the purple zone, with each bounce followed by a strong bullish reaction. But it's not just about bounces. It's about how price behaves each time it returns to this level. Notice the long wicks and sharp reversals. These are clear signs that liquidity is being tapped. Smart money is hunting stop losses, not just reacting to supply and demand. Earlier in the year, before April 2025, price approached this zone from below multiple times, forming a tight consolidation structure. This wasn't random movement. It was a classic accumulation phase. You can see price getting squeezed into a narrowing range where institutional players were silently building positions without triggering major breakouts. Then, in mid-April, the price dropped aggressively below the zone, triggering a classic stop hunt. But the very next move was a violent reversal, a V-shaped recovery, which immediately brought price back inside the range. This is textbook smart money behavior. Lure traders into false breakouts, then reverse with momentum. Once price re-entered the purple range, it formed clean higher lows and finally broke above the zone with strength in May 2025. This was the confirmation of the bullish transition. The breakout was followed by a beautiful retest. Price came back to kiss the top of the zone before launching into a new rally. Every trader watching the daily chart would have seen this as noise, but on the 4-hour chart, this was the perfect re-entry, clean, low risk, and backed by price structure. Throughout June and July, the rally continued and peaked around the 208.1117 resistance level. But again, price showed signs of exhaustion. It began forming equal highs, tight consolidation, and finally, a breakdown. This breakdown was not random. It came after a classic distribution phase, visible on the 4-hour chart as a series of lower highs and bearish engulfing candles. This structure indicates that large players were exiting long positions and preparing for the next phase, a retracement or reversal. Now, as of early August 2025, price has fallen back into our original purple zone, and here's where precision becomes critical. On the daily chart, this looks like a basic retest, but on the 4-hour chart, we see indecision candles, long wicks, and choppy movement. This is the perfect time to stay patient and let price reveal its hand. If the zone holds and we get a clean bullish reversal pattern, like a double bottom or a strong bullish engulfing, it could be the start of another swing back to 199.9970 or even retest the highs. But if the purple zone breaks decisively with a bearish close and a rejection on the retest from below, it could open the path to a deeper drop toward the 188,000 and 184.495 levels. This is where multi-time frame analysis becomes powerful. The daily chart shows you the big picture, the quarterly structure, and the overall zones of interest. But the 4-hour chart shows you the real battle, the manipulation, the traps, and the precise entries. This combination helps you avoid false signals and trade alongside institutional flow, not against it. So as we close out this analysis, remember, the key zone has held across both time frames, but it's being tested again and again. That alone is a clue. Either it's about to break, or it's preparing for one last rally. Let the price action guide you, not your emotions. React to confirmation, not speculation. That's how smart money trades, and that's how you win consistently. Thanks again for watching Financial Freedom FX. If you learned something new today, hit that like button, subscribe for more in-depth breakdowns, and comment below with the next pair you want us to analyze. Until next time, stay patient, stay smart, and stay profitable.